day, all. Ira Epstein with your metals market wrap-up, and this wrap-up is for Wednesday, the 11th of March, 2020, just getting on to 4:40 in the afternoon. By now, you know that the World Health Organization declared this COVID-19 to be a pandemic. They're a little late to the table. I think we've been writing about that for a long time, but now the world has decided what it is. The president tonight is going to talk to the nation and talk about what things he has the power to do. And they're going to try to find relief in some way that's fiscal. If you saw the Bank of England, today they cut their interest rate by 0.5 point, leaves them a 1/4 point, and then they added a massive amount of fiscal stimulus. We'll see what we do. The difference is, and I want to keep repeating this, there's a point where you throw it at the market to cushion it, and then there's a point where you help the market. It's called if you study viruses, which now, because it's been going on, I've been looking at them, and there's a bell curve. You get a beginning of it, you come up, you peak, and you go down. Think of China. Back in January, December, they started getting the virus. We started really hearing about it all the time, and now they're at the other end where the provinces are now allowing people to travel, the factories are reopening, things are getting back to normal gradually, but gradually, okay? They're about 70% operable in that, in many of the provinces, others getting back to normal. Italy today, and this affects the metals, all the Apple stores closed nationwide today as the companies save themselves. You'll see Starbucks, other companies that have to make moves. We're going to see that, so we don't know what tonight's going to hold. But when it comes to the metal markets, especially the gold, you've been seeing it sell off. And, you know, I realize that people on TV are always saying, oh, you got to own gold. It's got to be part of a portfolio. For a hedge, yes. But as a trade, the market hasn't been in an uptrend for a while. It made a new high, but trending, I don't know that I agree with that. We're also losing momentum in the note market. It was down today. You can see that the markets in the energy getting hit. So I'm going to put my glasses on as I've still got some eye issues that we're taking care of. But if you look at the weekly chart, it's a setback. It's not a change of trend. The market is down right now, $30 for the week. That's a lot. It's not a little bit, but it hasn't taken out previous lows. And more important to me, the market still has an upside bias as it's over the 18-week moving average. That's on a weekly chart. The daily chart is not trending. The market had a thrust to the downside, a thrust back to the upside that made a higher high. That was the best high in years, but now it's in a corrective mode. You see that in the swing line. So if I take off this whole part with this, even this correction, you came down, straight up. What is a trend? An uptrend is made up of a pattern typically of higher lows and higher highs. No trend has in some manner a lower low and a higher high. That's what you're basically in right now, and you can see how the market has been coming back. There's another part. When you get a market that's collapsing and everything around it, it's not unusual for investors to throw away things that they might value to support things that really, from a trade, turned out to be their investment, and they want to protect their investment. Gold is under selling pressure, as is practically everything that's a commodity right now. When we take a look at moving averages, you see how the market pulled back, and the 18-day average of closes is 1636. Well, where did the market go? Today it hit 1632.40 and held that area. Oftentimes, if you break, you come back to that average, you play around it. If that's from up here, again, you did it. And if you get under the number, it's not unusual to play the game there to try to figure out what's going to be next. I define gold as not trending. Not bearish, not bullish, not trending. In terms of bias, I still have an upside bias. When a market is over the 18-day average of closes or the 18-week, that sets my bias up, which means if other factors came in, other technical indicators that said buy or sell, I'd be looking at them. You're not getting that right here. What about the Bollinger Band? You hit it. And what do I say here so often to you? If you've got a wide band versus a narrow band, and even in a narrow band, I teach the same concept. First time you hit the band, that's where the pros often take out money. How do you know you're breaking out of the narrowness? Well, I count on 2 closes in a row, either over or under the band, to give me an idea. You need something to be a trigger, so that's one of them that I watch. The market's pulled back to the 18-day average, fighting a battle there. Don't quite know where it's going to go. The gold-silver ratio still backing off if you look at it, but it's not breaking. So gold is still stronger than silver overall. And you can see the silver chart, unlike the gold, staying under that 18-day average, and another bearish event took place today. You had the 18-day average for the first time in a while close underneath the red line. The red closed under the green. That's what I should say, the 100-day average. Now here, you had to get over and you didn't get any push to it. So these crossovers in silver have been okay, not something I'd bet the ranch on, but they do add some bearishness to the market. In the copper market, we are fighting at the lower band as it's trying to push itself to the downside. Not sure what that means with it one way or the other than to say the trend is down. Swing line, lower high, lower low. You're under the lower Bollinger Band. Therefore, I think that the pros wait to sell on the other side of that. We'll see if the market can get 2 consecutive closes under it, and if it does, that's a problem for the market. In the platinum market, this rules the day. You have an embedded reading. An embedded reading means the momentum index has gone flat under 20, and that often leads to more selling. And you'll say, well, Ira, I'm not seeing that. Well, that's actually not true. The rallies since you embedded keep getting sold into, and the market keeps coming back down. We'll see if it can make a new low or not, but so far the bias as I see it is down. In the palladium market, you've got lower highs, lower lows. You've been trading for a while now under that 18-day average. So this market, some traders might think until the world economies, plural, pick up, car demand, so on. Where is it? And this market's getting hit. And remember, it's gone from a market that was in scarce supply to when people need money. What did I say? Everything's on the table. And that's what happens. Now, the dollar index is still in a downtrend. Yes, the market's bouncing, but something more important happened. If we take a look, you had your embedded reading. You lost that reading yesterday. What do I say when you lose it? Unless it grabs it back immediately the next day. Often that's going to lead to price making a run at the closest moving average, which is right now the 100-day average, and so far I don't think that's changed at all. Can the market re-embed right away? No. Once you lose 2 days in a row, the market's just oversold. So I have an oversold market in a downtrend trying to reach its way up. Resistance might be between that 100-day average, and if that's broken through, and you get especially through 97.56, the 18-day average comes into play. On breaks in the market, the Bollinger Band's still the support. Trend down but oversold. So you put it together, you try to come up like the boards behind me with ideas, and as you can see, all the price quotes are gone. I want to remind you that one of the things that I try to do for you early in the morning is help you get through all this. Now, what do I mean by that? At about 5:40 in the morning, I start recording 40 charts. And I've already read what's going on in Asia and Europe. I know the reports coming out in America in the morning, and I bring them up for you, the events of the day. We're going to talk before we even get into the charts. What's going on? Did anything take place, such as central bank actions? What's taking place there? Tonight we're going to have the president. I'll talk a little bit about that to get your day going, how the markets seem to be absorbing it. And with that, if I think there are trades, I'm going to give you points of entry, exit, profit objectives with it. I'm going to cover the markets in a certain format each and every time. So as we get into this, and the idea there is to show you what I'm seeing on a chart. And by the way, the charts will look just like the ones behind me, jet black with more studies on them. But I'm going to cover the markets in this sequence. And there's a slide bar on the bottom. And on that slide bar, all you need to do is pull it, and you're going to see, for example, metals. You can get to the energies by just going. You can watch the whole video or parts of it. It's pretty simple. The typical video is about 20 minutes long in the morning. I really cover a lot of markets. Just think of with that, I'm covering each chart. There's about 40 charts in a very short period of time, but really detailed. And that's the idea. In order to get this, subscribe. $7.95 for the first 30 days. After that, should you want to continue, it's $15 every 30 days, or you can buy a 1-year paid upfront subscription for $156. Go to our website under the word research. You can find out all about it. I'm Ira Epstein. You have a good day.